Okay, let's talk kids investing. It's something that's really important to me because currently we're looking at an account that I have for my own son. So I wanted to develop a portfolio here at Rask Invest that I'll invest my own child into. And that's exactly what we've done with the Rask Luna model here. Okay, so now before we get into the nitty gritty, I just want to say I'm not going to be addressing the tax complications of investing for kids here. I have linked our full comprehensive kids investing tax guide to this video. So before you go and invest in a kid's portfolio, please have a chat to your accountant. It's incredibly important. You don't want to get really far down the track and have some serious, significant tax implications at the end of the journey. But talking about the Rask Luna portfolio, I'm just going to jump in here and scroll on down. You can see the asset classes that we invest in. We've designed this portfolio with three core things in mind. We want it to be incredibly low turnover because of those tax implications. We want to invest in assets that are going to have serious longevity. So ETFs here that are going to be in existence in 30 years' time, and are still probably going to be the class leading ETFs in 30 years' time. That's really, really important to us. And we wanted high growth assets because we've got decades of investing here. When I hand this portfolio across to my child when he's, beyond 18, I don't want that to be the end of this portfolio's life. I envision this, and look, maybe incredibly naively, extrapolating well and truly into the future and thinking about someone when they're 18 or 20 years old. But I want this portfolio to be the foundation of his investing. He can, take the income generated from this portfolio in the future and start buying individual shares or use it for holidays, etc. So we've thought about this in the terms of low turnover for low tax events, longevity. So we hold two ETFs in here. We hold the ASX 300 ETF from Vanguard, and we hold the IVV, which is the S&P 500 ETF from iShares. And we want it to be ultra high growth because they've got time for it to recover. So let's jump back into the actual account. Okay, so with this portfolio, you can see here I've been adding a little bit to it. It has a minimum investment of $5,000, so a lower entry point than our other investment options. You can see here, as I've added money, we've been buying these ETFs along the way. So this portfolio is important because it's more about what it doesn't do than what it does do. And so why I think this is appropriate for children is because the way that we invest, unlike other, say, high growth portfolios, they will be rebalanced. So there'll be transactions happening in those portfolios. Say if you're using a high growth ETF, like a singular vehicle, inside that ETF, transactions are going to be happening and there's going to be tax consequences. So with us here, we've designed this where we hold these two simple ETFs, and the rebalancing actually happens when you add money. And so I know, like myself, I'm gradually adding funds to this. My parents, so my son's grandparents, have got the bank details. And so they'll add money on Christmas and birthdays as well. And so what that money goes into goes into the whatever ETF is underweight compared to the model. And so it's just a nice gradual rebalance, as you might do with your own portfolio as you go, rather than actually cutting and selling and triggering tax events. That was really, really important. And it's important to note that these two ETFs themselves are passive ETFs. So inside the ETFs, yes, there's quarterly rebalances taking place, but it's at the bottom end of that ETF. So it's dropping out the smallest companies and introducing other companies right down the tail end of the ETF. So we're keeping the tax events minuscule here. So we can just have compounding going on for 10 years, 20 years, 30 years, 40 years. I hope he still holds these two ETFs, when he retires. So yeah, longevity, low turnover, high growth. Check out the tax guide that I've linked to. Also book a call with myself. I can walk you through this portfolio and how we invest for kids. Thanks.